Hey, what's up, stock compounders? Brad here. So it is time for our weekly Q&A session. So let's just dive straight into the questions for this week. The first question from Jake: would love to get your thoughts on Bill Ackman's recent deal with Universal Music Group, if you have any. So this isn't really something I've dug into. I know Jack Duffley and Karan Gurnani, both fellow YouTubers that I do punch card investing with, have both put out videos about this recent Pershing Square Tontine Holdings deal. They're both investors in Pershing Square Holdings, so check them out for more details on this UMG deal from the SPAC from Bill Ackman. There is something I noticed that was interesting about this. So I've been diving into Chris Myers Holdings, of course, author of 100 Baggers. I've basically looked through the last year of tweets where Chris Meyer has said in parentheses that disclosure long, that he owns these positions that he's been talking about in tweets. And there's a company in there called Bolloré. Okay, I think that's how it's pronounced. Bolloré, out of France. It's a French conglomerate managed by activist Vincent Bolloré. And it looks like Bolloré has a position in Universal Music Group. So that was kind of an interesting overlap between Pershing Square and Chris Meyer's current holdings. And I'll be talking more about that as I put together a Chris Meyer portfolio positions video probably this week. But anyway, I don't have any particular thoughts on UMG and the Pershing Square deal. Yugal: invest in a business you understand. When trying to understand a business, besides the financials as the first filter, what's the best resource to stitch a story? How do you do that? Yeah, well, I think the easiest way to do this is to invest in businesses that you use, right? Businesses that scratch an itch that you have, right? You're the customer. So you already kind of have exposure to that business. You understand it, at least from a customer perspective. That's one way to go about it. Another way is to just, read great write-ups from other investors on Value Investors Club, on Corner of Berkshire and Fairfax. There's a ton of websites, Manual of Ideas, that aggregate kind of investment write-ups for different companies. So that's another way to kind of look at potential investments from a perspective of an investor who, has some experience in investing. So, and of course, you can read through 10Ks and 10Qs. That's a great way to get a sense for a business over time. Just look at the last 10 years of 10Ks, and it's going to give you a lot about the story of a business. Would love your thoughts on Coupang. So Coupang is kind of the Amazon of South Korea. Came to my attention in the last round of 13F filings. Looks like a company that adopts Nick's Sleep model of scale economies shared and run by CEO Bam Kim that is intensely customer focused. So I have not looked more into Coupang at this point. As most of you know, I have a fairly large position in Alibaba ever since we saw that Charlie Munger invested in Alibaba. And I've really been going down the rabbit hole of Alibaba. A lot of great investors say you don't really understand a business, an investment, until after you own it. So I've just been drinking from the fire hose of Jack Ma and Alibaba. So that should give me a lot of tools to dig into Coupang if it's, if it seems compelling when I'm ready to dig into that. And of course, Alibaba definitely fits into Nick Sleep's model of scale economies shared. You know, Jack Ma, it was, first focus of Alibaba is on the customer. Second focus is on employees. And then third focus is on shareholders. So intense customer focus from Alibaba. What else have you learned recently about Baba? Will you be attending the Pabrai annual investor meeting near Newport Beach in September? I will not be. I don't have any stake in Pabrai's funds, so I don't believe that's open to me. If you can bring a guest, definitely reach out to me. I definitely try to be available for that if that was an option. Sounds like a fantastic opportunity to, hang out with Mohnish Pabrai and maybe even ask some questions. But yeah, in terms of anything recently that that I want to share about Alibaba, probably my best advice for people who want to dive in is to read Alibaba, the house that Jack Ma built. Okay, it's a fantastic book, kind of documenting the history of Alibaba. So check that one out. One of Mohnish Pabrai's 10 commandments of investment management states, "Thou shalt never use Excel." Absolutely. Given Mohnish is one of our top gurus, why do you use Excel when assessing intrinsic value? That's a great question. So the quote that came to mind when I read that is, Einstein said there are 5 ascending levels of intelligence. Okay, smart, intelligent, brilliant, genius, and simple. All right. Now the last one, simple, is where I want to get to. Okay, that's where you can look at a business and you can identify what are the few variables that matter to that investment, to that business over time. Because, if we can identify those few things that really matter, the Excel models, right, the DCF models, that's unnecessary, all right? I'm not there yet. That's why I use the discounted cash flow spreadsheets and whatnot to try to wrap my head around the financials of a business. So short answer is I'm not there yet, but I definitely want to get there. I want to eventually not need to use Excel anymore. After dinner investor, how much of your investing time is dedicated to looking for and at individual businesses versus general reading and growing your worldly wisdom? Great question. I find this ebbs and flows a bit. So because of where the market is now in the US, because it's been quite difficult for me to find compelling opportunities because of where prices are for a lot of businesses, justified by low interest rates, but still, in my opinion, too high to be prudent. I've spent more time recently doing general reading and, studying other great investors as opposed to digging in to individual businesses. So, I think for me that just ebbs and flows depending on, how much I'm finding that's interesting, that I want to kind of go deep into. When you've cloned your favorite investor, how much time did you spend researching before pulling the trigger yourself? Ceritage and Micron after Pabrai, Baba after Munger and Pabrai. How much time did I spend researching? Ceritage, I spent, it might have been a month or so, kind of digging in at the property level to, what my downside risk was with Ceritage. Micron, I think it was even a little bit longer than that, maybe a couple months. And then Alibaba, Alibaba had been on my radar for a while. I had made a video probably 6 months before I bought Alibaba, stating that Alibaba was on my watch list, one of maybe 12 companies on my watch list. And I really wanted it at around 216. Ended up buying it at 227. But yeah, so, I like to do a fair bit of research before entering a position. So those are kind of how those three played out. Next question. There are a few risks with Baba getting delisted on the New York Stock Exchange. Did you look at the option of buying 9988, which is listed on the Hong Kong Exchange? I didn't look too deeply at that. I could have bought that through Interactive Brokers. I only own one stock through Interactive Brokers. It's not my primary brokerage. And I'm still hesitant at this point to kind of make it my primary brokerage. I'm just, not all that comfortable with the interface yet. And yeah, I guess it's probably change is hard, right? I'm slow to make changes like that. And honestly, guys, I'm not super worried about the delisting risk for Alibaba. I think, if that happens, it goes to over-the-counter status. I think we'll still be able to own it here in the U.S. over the counter. And so to me, it doesn't have a huge impact on, my ownership in Alibaba. So it's something I know a lot of investors are concerned about. A lot of investors are staying out because, it's just a lot of uncertainty, right, from their perspective. But it's not really something that I'm losing sleep over. Can you do review videos on the events at the Brown University Virtual Value Investing event? Looks quite interesting, and apparently they're going to have Pabrai and Howard Marks soon. So I'm not familiar with that, the Brown University Virtual Investing event. Yeah, I'll take a peek at it, and if there's some dense kind of content in there that's got a lot of nuggets, juicy nuggets, yeah, I'll do some summary videos from that. So thanks for that resource. Which stock is Andrew Rosenblum's new potential idea? I heard of you mentioning that at the Punch Card podcast. Yeah, so Andrew Rosenblum runs Bonsai Partners. Looks like they're kind of restructuring. And because of that, Andrew Rosenblum has expressed that he's going to be less open to discussing new ideas through Twitter and other avenues, such as his letter to investors. So in his most recent letter, Q1 2021, there was this new idea that he talked a little bit about, and it was kind of spoken about as anonymous. Okay, so he's not revealing which company it is. There was some speculation on Twitter that it was a Chinese company, and there were some names. There was one name in particular that was floated, but I have no way to verify how accurate, if that was actually the company that was purchased by Andrew Rosenblum. So I didn't do any deeper work on that. I think one of my Punch Card fellows, Investing with Frank, did take a bit of a look at that company that was speculated as to Andrew Rosenblum's new position. So reach out to Investing with Frank if you guys want to learn more about that. Next, Buffett likes to invest in simple businesses where he understands the challenges and the economics well. For example, airline businesses, department store businesses, and it talks a little bit about why Buffett can wrap his head around those kinds of businesses. These are great insights. In retrospect, I wonder how he or others can gain this perspective going into the investment. Without a business background, I don't have any way to verify my understanding of a business, or to put it differently, I lack the framework of what questions to ask. Agreed, that's very important. Have you come across any books that talks about industries and the economics of those industries? Well, Pabrai mentioned one back when he was investing in the shipping industry. There's a book called The Shipping Man that he read to really get a handle on these VLCCs, very large crude carriers. Frontline, I believe, was the investment that Mohnish Pabrai made. My best advice around this is if you are curious enough about an industry, you will figure out how to piece together really what drives that industry, how that industry works, and what drives the businesses within that industry. You know, Li Lu talks a lot about that. Charlie Munger talks a lot about that. It's this insatiable curiosity that really drive investors to understand at the deepest level businesses and industries. So if you have that, you know, it'll take care of itself, right? You will turn over every stone to really get to the heart of what makes these businesses tick. If you don't have that, it's probably not going to happen, right? If you don't have that burning curiosity that's driving the engine, and you don't have experience, right, running businesses in these industries, it's going to be tough, okay? So you may consider other ways to invest where you don't necessarily need to have that deep knowledge of businesses or entire industries. It could be some version of cloning. It could be, you know, index investing, whatever it is. The important thing is that you're honest with yourself, right? About what you're willing to do and what you're not willing to do. And then invest from that knowledge about yourself. So, you know, the hardest thing is to be honest with ourselves about what our limitations are and what we truly understand. After you do pull the trigger, so this is a continuation of the question before about how long, you know, do you research after you get an idea from a great investor. After you do pull the trigger, how much effort do you put in watching the company before the next 13F comes out? It really varies. You know, it just varies. How curious am I about that particular business? How important to the investment thesis is it that I stay on top of current developments versus, you know, if it's really just a 10-year play that's going to take quite a bit of time to play out, like in the case of Ceritage growth properties, you know, I may not be in that kind of mindset where I just want to devour every piece of information that comes out. Do you know if you can journal your BABA shares to the Hong Kong version, or are they different entirely? That's a bit outside of my competence, so don't know the answer to that. Thoughts on AGL Energy and their plans to split their business. Spit their business. That would be a new thing. I don't know anything about AGL Energy. I appreciate when you guys send me new ideas. What would be really helpful for me is if, you know, when you have an idea you want to run by me, send it to me on Twitter. My DMs are open. Direct message me on Twitter or on LinkedIn. And let me know two things about the business. One, is it a 100-bagger over the next couple decades? And if it is, you know, what is your rationale behind that business being a 100-bagger? And the second one is, what great investor do you know that has put money behind that idea? Okay. I'm a shameless cloner. It's not really something I want to take shortcuts around. So, let me know who that you really respect as an investor owns that business. So those are the two pieces of info that I would love to see before going deeper on it myself. Do you use a spreadsheet to calculate company figure growth rates, such as return on equity, free cash flow, earnings per share, sales, book value per share, etc.? Historically, I've used spreadsheets to calculate many of those things. Again, I'm trying to move more and more away from spreadsheets, but I do still tend to rely on that. Question on buy and hold. As Charlie Munger says, you make money while waiting, not when you buy or when you sell. It makes sense to buy unvalued companies and hold it until it gets fairly valued, right? Buy undervalued companies. What if you're holding stock A and you come across stock B that's way cheaper and has the same risk? From a value investor's lens, does it not make sense to sell and convert to this better opportunity? Any anecdotes from super investors on converting to better opportunities? Yeah, so I got one recently. This came up on the last Punch Card Investing live stream. So Mohnish Pabrai, a beautiful one-liner he put out recently was, the mistress is always hotter than the wife. Okay? So what that means, companies that we own, we know a lot more about those companies than companies that we're kind of watching from a distance, that we don't own yet, but look potentially alluring, right? We know everything about the wife. We know all of the warts and the defects. That's too strong of a word. We know both sides of the wife, right? The pros and the challenges. The mistress, all we see is the lipstick, right? We see this, perfectly manicured exterior on the mistress. So that's the big struggle. When you own something and you're looking at something else, I think it's probably really important that the thing we're looking at is an order of magnitude better than what we currently own in order to make that switch. Okay, and I don't know what an order of magnitude is, but it should be significantly better because we don't know as much about it. Okay, so that's the risk there, lack of knowledge. So that would be my advice, is to kind of make sure your hurdle is high enough to make that switch, to account for everything we don't yet know about that business that looks so alluring from a distance. Any thoughts on Topicus? Do you own it in your portfolio? I do not own Topicus. Chris Meyer owns it. It's one of his 11 positions. There's a great write-up on Topicus from the 10th Man. If you search the 10th Man Topicus, it'll pop up. The 10th Man also did a write-up on Constellation Software, which is where Topicus came from, right? It was a spin-off of Constellation Software. And I don't have any additional thoughts on Topicus at the moment. It's still something I'm trying to wrap my head around. Let's see. Which stock is closest to becoming your next best idea? I don't know that I have one at the moment. I don't know that stock is currently on my radar. So, unfortunately, I want another high conviction bet, but I don't really have anything in the queue. I'm going to jump around a little bit here, guys. Let's see. How do you see the fact that Li Lu sold his whole Alibaba position in Q2 of 2020 and Munger and Pabrai started buying in Q1 2021? Li Lu is probably much better in judging Baba because he is from China. I would agree with that. On the other hand, he is also very close with Munger and Pabrai. Just curious how you see it. So this is something that I've thought quite a bit about. There's some speculation that maybe Li Lu sold the U.S. listed shares, the ADR, and bought the Hong Kong listed shares. I haven't been able to verify that. When you search Himalaya Capital in China's kind of equivalent of the SEC.gov website, there's, I think, two positions. One is Postal Savings Bank of China. I forget what the other one is. I did this like a year ago. But Alibaba doesn't show up. So it's a big mystery to me. I wish I could ask Li Lu or ask Charlie Munger or Pabrai, if there's been any discussion behind the scenes about Alibaba. I have to assume that Charlie Munger talked to Li Lu directly before he bought into Alibaba. Maybe there's some reason that doesn't involve the business that Li Lu doesn't own Baba, ticker Baba. I just don't know. It's really all speculation from me. So, but it is something I am very curious about. And hopefully, maybe someday when Pabrai sells Alibaba, he gets out, we can get some answers to those questions. Let's see. Does Buffett still own Ceritage Growth Properties? I don't know. Unfortunately, because of the way the cards were dealt, the OP units, the operating partnership units being converted to common, pushed Buffett's common ownership below 5%, and so he's no longer listed as a 5% beneficial owner in the 10K. So I don't know if Buffett still owns Ceritage or not. That's no longer something we can track, as far as I can tell. Have you read Richer, Wiser, Happier yet? I am currently halfway through, and it is fantastic. So I've kind of been jumping around. I've probably listened to half of the chapters in Richer, Wiser, Happier. I've also been, listening to some other investing books on Audible. So it's been kind of all over the place over the last couple of weeks for me. But I'm sure I will get through the whole book at some point. I'd like to do a summary video of each chapter in full of Richer, Wiser, Happier. I think it's just so well done. It's such a well-researched and put together book that, it's been really enjoyable to read that one. I highly recommend it to all of you who want to be better investors. It's probably the best investing book that I've read in 2021. If you bought a stock from Magic Formula in Q1 and check it 3 months later, given the price is 10% lower and the company is no longer on the list, it tells me even at a lower price, it isn't cheap anymore. The numbers have changed badly. Business is not doing well. Would you hold the whole year or would you sell and change? What do I misunderstand? Yeah, so in terms of the Magic Formula, if a company isn't, if a company drops off the screener, there's a number of reasons that it could have done that, all right? If the price is lower, it would have dropped off most likely because earnings dropped, okay? Kind of more so than the price did, okay? Because there's two metrics that go into the Magic Formula. There's earnings yield and there's return on invested capital. And they both involve earnings over the last 12 months. So, the whole thing about the Magic Formula, question about would you hold the whole year or would you sell and change? The Magic Formula was designed to be a very mechanical investing strategy, okay? So if you're trying to get in there and look at earnings for each of these companies and tweak the portfolio in shorter than 1 year time horizons, that's really not the spirit of the magic formula. That's not how it was designed to be implemented from Joel Greenblatt. So no, I wouldn't sell and change quarter to quarter. I've actually tweaked the magic formula in the opposite direction, where I want to buy, and instead of just holding a year and then reassessing, I'm going to be holding for 2 years, okay, and then assessing at that point, perhaps even 3 years. So there's no end to tweaks that one could make on the magic formula or any other investing approach. But I think the magic, part of the magic of the magic formula is, holding for at least a year these companies. Okay, so that would be my advice. Anything else? Yeah, we'll finish with David. What is something that investment gurus you follow believe to be true that you believe to be false? I don't know why I went there. This is something I'd need to spend a little time thinking about. Yeah, I'm going to have a think on that, and I will try to cover that in the next Q&A. David, please ask that again in the next Q&A, because I really like that question. It's kind of a, who is that wrote 0 to 1? I can see the book. 0 to 1. I'm blanking on it. The question he asks in interviews, what is something you believe that very few people would agree with you on? I think it's just a fantastic question, but it's difficult. It kind of forces one to give a contrarian answer, which can be uncomfortable. So, if I'm going to give a contrarian answer, I want to make sure I actually believe that contrarian answer. So let me sit on that one, David. All right, guys, that is all for this week's Q&A session. Thank you for all of your thoughtful questions this week, and I will see you all in the next video. Take care.